What's up, everybody? Jonathan Rose, owner, Master in Trading. This Friday, on my favorite long Twitter, I lost $17,000. I am still incredibly bullish long-term Twitter. So I'm going to show you exactly how I'm managing this trade, what my thought process is, and finally, the big takeaway. If 10 people take the exact same trade, you're going to get 10 different results every single time. Let's get into the video. Okay, for those who don't know how Masters in Trading works, every single Sunday I share my favorite options trades. We also share our favorite futures trades. Every Monday we have a live class to talk about those options trades. We have another live class to talk about those futures trades. That's the Portfolio Masters Club membership. On the 8 to 12 trades that I share, recently I've had 3 longer term, we call them IRA trades. One of them is Twitter. Twitter was shared June 21st. So Twitter was shared right here. I got into the trade. Twitter went against us right away. Oh, bummer. Some people were upset at me because they get in and then the trade goes against and they're like, oh, Jonathan, you suck. I lost money. I'm on to the next guy. Well, I do a ton of research for my trades. These are IRA. These are longer term trades. Here's my position in Twitter. Trade was shared 621, excuse me. I got in 622. I bought 600 shares at 33.14. 629. Twitter's going against. Some people are angry with me, but the way I look at it is I did a ton of research. If I liked it at 33, 5 days later, they're going to give it to me at 28.35. Sign me up. So what did I do? My first trade, I purchased 600 shares at 33.14. 7 days later, I purchased 600 more shares at 33.14. Twitter started to go higher. A lot of people thought I was smart. A lot of people like me when the names that I pick go higher. It looked like it was going higher every single day, like the overall market. I didn't touch Twitter. I'm still incredibly bullish about Twitter. But what happened is they had really shitty earnings. Stock got up to 53, sold way off, went down 21%. This sucks. Paper profits, you can see on Friday, I lost $17,000. Now, did that get me sad? Did that get me bummed out? Well, I mean, it sucks, right? Nobody wants to lose money, but I think of things differently. I think of this trade as in June, I got in Twitter, a long-term holding, and right now in November, it's trading 41. I'm up 11 grand on the Twitter trade. And so what I did this past Friday, and as you can see, I bought more shares at 42.10. Went against me a little bit, but that's okay. I'm building a position for the long term. Now, 10 people get in, 10 different results. I've liked this trade for a while, so some folks join me and they see under long-term hold Twitter, oh wow, look at that strong uptrend, and they come in and buy Twitter at 52 and now it's trading at 42 and they're not my friend and they're very upset with me. But to that person, I've got to tell you, a longer-term trade, you have to slowly ladder in. The market's going to move. You can't get scared out of every single move. So the way that I look at it is nice, gentle uptrend. This got a little crazy. It's just nuts. Okay? And so all they did was took this part away. So if Twitter would have naturally just traded up here and grinded up to this level, would I be upset? Fuck no. I'd be chilling. I'd be real happy. It's just a matter of the volatility did this, but this is all noise. I don't think of this as real. I'm going to be in Twitter for over a year. I think Twitter is going to trade over 100. I am really significantly bullish Twitter going forward. Unfortunately, they pulled back. It didn't help that Dorsey was in front of Congress. The earnings actually weren't that bad. Now, I did get a lot of questions because we did see unusual options activity on Twitter. So if I'm going to second guess myself at all, this is where I'm going to. So here's our unusual options activity tool. I was a market maker for 5 years. Market makers only use unusual options activity to value options. They follow options flow. This is a proprietary tool that we built to follow our favorite scans, which are all done by these different codes. And then the next phase of this is we're putting in some artificial intelligence or a neural network that will track the behavior of these different scans and then give us a confidence level on the amount of unusual options activity in a given name. That's for the next update. But the one second guess I have about Twitter is massive amounts of unusual options activity, right? Going back to October 16th to October 29th. The scan was just picking up some just monstrous trades that kept on going through. IV percentile was over 90% the entire time. You can see IV going back to the 16th was 68, and then it goes into earnings at 115. When we see lots of unusual options activity, it's one of these things where there's smoke, there's fire. If we go back and look at this time period right here, January 27th to February 4th, you see this is a cluster. It's not random, right? One day after the next day, after the next day, after the next day, after the next day. Someone's moving some significant capital within the options market of Twitter. If we then go and look at the time frames, January 27th to February 5th, obviously that was before the pandemic, and this was the time where there was a lot of fishiness going on in the government as far as who is getting all the information about the pandemic. So it looked like all these orders were actually down here before Twitter jumped, starting on the 27th. So all right here, maybe they knew something bullish. Maybe it wasn't about the pandemic, but nevertheless, when we start to see a ton of unusual options activity, something's going on. Somebody's buying vol. Somebody has a strong opinion about which way the stock's going to go. Now, me, perhaps maybe I'm a little bit stubborn. We had such a nice cushion built up in Twitter. So I looked at this as, oh, great. Look at all the unusual options activity. Not only is this thing going up as fast as possible, but it's also going to have the behavior like Snap, or Snapshot up, or like Pinterest. So when those started to come out before Twitter, that gave me a little bit of confidence, perhaps. Maybe I was being a little bit stubborn because I already had a bias of staying long Twitter. So that's why I didn't look at that and consider that the downside was in play. I knew that if the stock did pull back, I still had such a big cushion that I was a buyer anyway. So therefore, I kind of just went for, a home run on the upside. I was wrong, but this is a long game. And what I mean by that is now if I just take a step back and think, got in the trade June 25th, I'm long from an average price of $33 and it's trading at 41. How do I feel? I feel pretty good. I feel pretty blessed. So that's how I'm looking at it. I'm still very bullish Twitter. A couple of second guesses in there, but to tell you the truth, I ain't really thinking about second guessing. I'm thinking about moving on and what's next. Hope it helps, guys. My name is Jonathan Rose. I'm the owner of Masters in Trading.